Guys, welcome back to the Independent Investor Channel. It's really good to be with you guys. For you guys that have been with the channel for quite some time and the new subscribers that have just made their way into the community, I want to welcome everybody. You guys know how transparent I try to be on my stock moves, my portfolio moves. And for you guys that are new to the channel, you guys know I'm self-directing a portfolio worth over $300,000. So I try to be as transparent as I can. I try to offer my word as a testimonial on what it is that I do. I just want to premise, before you go out there and make these moves or moves on your own, certainly want to make sure that you're doing your own homework on these. But when it really comes down to it, we are talking about stock, whether it be single stock or ETF products. And on this particular video, I'm going to earmark 8 specific sector ETFs that I'm buying right now. This doesn't get talked about at all on YouTube at all. And I'm actually making a move into the sector specific ETFs. I've said a couple times on the show that I don't really advocate for sector specific ETF or SPDR ETF investing. And there's a reason why. If you try to go out and buy one sector specific ETF and that particular sector decides to zig when you're doing a zag, you're going to end up being punished for it. So my solution to it is to buy all of them. And that's what I'm going to be doing. I left energy sector specific off of this, and I left materials, as I'm still going to have 25% to 30% of my portfolio exposed to single stock. But in an effort to diversify my portfolio, we're going to be moving into some sector-specific ETFs. And for you guys that are invested in the total stock market, that's awesome. I do the same thing. For you guys that have invested in the S&P 500 through the VOO, that's awesome. I do the same thing. So those passive accounts that I've got, those don't do anything. Those will continue to remain in place and continue to be a passive, funded, dollar cost averaged piece of my portfolio over time. But I thought I'd come out with this video and talk about the 8 sector specific ETFs. You guys will notice these all come right off of Vanguard. Certainly going to provide the link. I provide all this information on my Facebook group. But I want to run through what I ended up buying. I'm buying at the start of the market tomorrow. I didn't have my opportunity today. The market was closed. But come tomorrow, we'll be having some starting positions, of course, scaling into these positions. And I really thought you guys would enjoy some visibility on what it is that I'm doing and moving into some of these sectors specific ETFs and why I'm doing it in the first place. The first one is the VOX, and that represents the newly formulated communication services sector. And I'm going to be trying to get 9% of my portfolio exposed to that. And you guys are going to understand I'm trying to play by some benchmarks here of percentage of allocation, all right? Now, make no mistake, I'm looking at a 70-30 split over my portfolio, so very, very complex in putting a lot of moving parts together to try to get that 70% stock ETF allocation that I'm looking for, and then the top end 25 to 30% into stock. But this is just an awesome sector-specific ETF, man. Communication sector represents 79 different companies. Every single one of these has an expense ratio of 0.1. All right, so 10 basis points of expense, so very, very affordable in your self-directed Roth IRA accounts to go ahead and house these assets in and just kind of educate you guys up. I know there's a lot of new viewers to the channel. And if you knew nothing about the stock market and you've tuned into a few of my videos, you're starting to talk the lingo. You really are. You're starting to use the correct terminology about what an ETF is and what an index fund is, what the benefits and the downfalls of single stock ownership are, maybe what your risk tolerance is. But you guys are the ones that are really going to benefit in understanding what I'm looking at with each of these sector-specific ETFs. Most all of these were incepted back in 2004, and they've returned on an average in most of these around 10% year over year. That's with the financial downturn of 2009. So 10% in these. And the reason why I'm making this move here is to diversify my portfolio. I've manufactured a lot of gains within my portfolio through stock trading, through stock investing, both on the long term and the short side. If there's a profit there to be had, I'll take it. So a lot of these purchases are going to be, I'm going to be liquidating some of my stock positions back a little bit. I'm not going to be liquidating totally, but some of the positions that I've got, I think I've got 6 positions that are due to liquidate down a little bit. All right. So for example, they go from, maybe a 40 share position down to a 10 share position where I'm selling, 30 shares of white meat. And I'm looking to just hold on to my core 10 share position and use those funds, house funds, to go ahead and buy some of these sector specific ETFs in my portfolio for the sheer sake of diversification. It is a play at becoming defensive on the stock market before the turn of the year, January of 2019 and into next year. It's just a defensive mechanism to make sure and just manufactures some diversification within my portfolio. I think the volatility is going to remain in the stock market into 2019 and 2020, where most of the economists are talking to really keep your nose to the grindstone in understanding that we may have a recession on the horizon, right? So we want to be thinking about those what ifs now, all right? So the VOX gives me that exposure to the communications sector. And how does this change the makeup of my portfolio? All right, you guys know I own China Mobile. You guys know I own a big position in Verizon. All right, we've reduced the Verizon position down, and we're going to go ahead and put that diversification to work in our VOX, the communication services. Of course, this newly formed has Google, Facebook as well. So we're going to start to really enjoy some of having this diversified base in the portfolio in the communications sector. The second one is traded under the ticker symbol VCR, and that's going to be our discretionary, and this represents 325 companies, guys. So just like the previous one, 10% rate of return, about 10 basis points of expense on this, so very, very inexpensive. All the Vanguard products are in the top 90th percentile of cost when you compare it to the rest of the products in the industry. So that is why I don't typically stray too far away from Vanguard products. If they're good enough for me, they're good enough to tell you guys about in maybe being an option in your particular portfolio. So the discretionary sector ETF will be added tomorrow morning. The staples as well. 91 offerings within this, traded under the ticker symbol VDC. Again, another Vanguard, same expense ratio, year-over-year return of close to 10% here in the VDC. The financials is a little bit recessed right now, year-over-year. They've just been beat up over the last 10 years. It's still returning a clip of 7% in the ETF. We're going to pick it up right here, representing 405 financial institutions, names that I would never ever think to buy on an individual basis. I'm going to take some reductions in some of my single stock in the financials, and I'm going to start to backfeed some of these sector-specific ETFs, and the VFH is just one of those. Now, I've split these sector ETFs between my brokerage house. There's going to be 2 of them going in there, and the remaining split is going to be between my 2 Roth IRAs. To just add more diversification exposure to each of the 2 Roth IRAs, and I've split them up based on the risk tolerance, where half will go into my spouse's, the other half will go into mine, and it was kind of based on a risk tolerance evaluation in that I took the tech and the industrial, and my spouse ended up taking some staples and some other names here that will be appropriate for her risk tolerance. The healthcare will go into my spouse's as well, traded under the ticker symbol of VHT. Healthcare is on fire right now. It's more of a play on the future of the baby boomers coming into and needing healthcare services. Guys, I can't own the entire sector. This is the way to get that exposure to that particular healthcare sector. Got 368 representatives inside that sector, and we're going to be entering into the healthcare sector with VHT. The next one is industrials, another one of my very favorite sectors. Might as well just start a token position in owning the entire sector. Why not? So traded under the ticker symbol VIS. The Industrials Sector ETF has got 350 different stocks in there, so we're going to be adding that tomorrow as well. Keep in mind, these are starting positions in between about 10 to 20 shares in each of these, so starting positions. All right, so most of them in between $1,000 to a couple $1,000 positions in. If you didn't have that and you were just looking for a starting position, start with a couple shares. Okay, for you guys know, I've just started my first trade account. I've transferred $2,500 into that account, and I'll be buying the small cap ETF from Vanguard, which is VB, in that account. I'll be doing a follow-on video on that particular offering as well, on how I'm strategically using that particular first trade account, which I've recommended to you guys, and you guys know I'm affiliated with. But the VIS there. VGT is the tech ETF. So we're going to grab this VGT, and I'm going to add this in my portfolio to add that diversification on a sector specific basis. 321 technology companies. Again, if I invested an entire lifetime, I could never own all of the stocks that are represented inside this fine ETF. And the last one is VNQ. That's going to be the real estate REIT. A lot of you guys ask me about it, what my favorite REITs are. I always come with Simon Property Group and American Tower REIT. Those two are numbers 2 and 3 within this ETF. And you've got a chance to own all 184 of the real estate REITs out there represented in this particular sector ETF. Now, the VPU, you guys know, I've owned it for quite some time. It's been a pleasure. I took it down into a downturn and I just held it. I kept it. Now it's back into the black and it's actually making me very good money. I was paid dividends while it went into that little bit of a funk. I guess I bought utilities at the wrong time. No be it. No problem. The sector ETF allows you those types of mistakes. It doesn't matter. If you end up buying these at the wrong time, you basically just hold on to them. And buying a big basket like I am, the thought is that some are going to outperform others at different times in the rotation throughout the year. And the idea is that you own a good basket of these and provides me more diversification built into my portfolio, which is exactly the defensive mechanism that I'm going for going into 2019. And just in closing, I'm getting exposure here to just under 2,200 stocks here by making this maneuver. The sheer purpose by making a move like this and taking some profits off the table from some of the single stock that I'm liquidating to move into this position is defensive in nature. We're going to be coming out with videos on some of my concerns, both on the chart side of the house and also the national debt side of the house, which if there's one governing concern that I have right now, I don't want to exit the stock market, but I absolutely want to pay attention to the national debt right now. Over the last 10 years, we've doubled our national debt. We've had a killer run in the stock market, but this national debt is going to someday really be a real negative to the stock market, and we want to start to plan now to understand that if we can own the diversification, the defensive mechanism of diversification, that's going to protect our assets to the downside if we do entering into a heavy correction or even a recession. Guys, thank you so much for tuning into this explanation of transparency on one particular pillar in my portfolio that I'm actually adding. It's going to be the sector ETF section of my portfolio. I'm doing it for diversification. If it's your first time tuning into the Independent Investor channel, man, you want to consider subscribing to the channel. Hit the bell, get the notifications of any new uploads that I put to YouTube. Share this message, man, with anybody out there that you know that needs basic information in the stock market. You cannot help but to learn if you come to the Independent Investor channel and start sifting through some of the videos that I've offered to you guys really free of charge. Really, a lot of people are charging a lot of money to have this information, especially the transparency on how it actually works in a real portfolio. Guys, leave your comments at the bottom if you think I've hit the mark with this explanation. If there are sector spider ETFs that you guys are investing in, throw them in the community, and that way we can all benefit from different picks in the community. Guys, thank you so much for tuning into this message, and good luck in your investment future.